Hey everybody, about a week ago, Tyler Crowe and I did a video about home builders and how they're so beaten down and what the market's expectations are, what the tariff risks are, things like that. We're going to revisit that today because some of our favorite home builders reported earnings. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. They're the sponsor of this video. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So, a couple of days ago, I was about to call Tyler and say, "Hey, Tyler, my favorite home builder, Dream Finders Homes, just knocked it out of the park with earnings and the stock is up." And then I realized that his favorite home builder, Green Brick Partners, did even better. So I didn't make that call. But here we are to talk about both of them. So credit where it's due. Both companies had great quarters. I think before we go any further, Tyler would agree with that statement.
Yeah, I mean, growth was for a business that we have been talking has been in the absolute doldrums. There was quite a bit of growth on a year-over-year basis for both of these companies.
Yeah, I mean, Green Brick, I didn't actually check how many times they used the word record in their press release, but it appeared at least a dozen times.
Yeah, there was a
Um,
lot.
Yeah, it was the highest revenue ever, highest earnings per share ever, highest gross margin ever. I could keep going, but I'm going to take all your talking points if I do. Dreamfinders didn't quite get to that. They had a record high number of home closings in 2024. Um, they had guided for 8,250. They're a somewhat bigger home builder by volume than Green Brick is. They did 8,583 closings, so about 300, a little over 300 more than expected. And they made that call for the 8,250 before the market started to think that home building was doing terrible. Like before the tariff worries came into play, and before a lot of the market before interest rates jumped back up unexpectedly, and things like that. So this was a very nice surprise for both of these home builders. But like I said, I'll briefly go through some of Dreamfinder's numbers, what I liked and what I didn't, because there's no such thing as a perfect earnings report, or at least I've never seen one. So there are some things to talk about here. Um, it was an exceptionally strong fourth quarter. They cleared through a lot of their backlog, which is one of the things I'm not that happy with. They have a much smaller backlog as we headed to 2025 than they did. It's down from about 4,000 homes in the third quarter to about 2,600 homes now. So big backlog decline. That's a big difference between the two. Green Brick's backlog declined, but not by that much. And Dreamfinder specifically said that the way they were able to achieve that volume was to offer a lot more incentives. Now, a lot of those incentives are financing based, which, that's why home builders have had an edge is a lot of the time because they can offer these financing deals. But incentives take many forms. So that's somewhat something to keep an eye on. You don't want companies to start giving away their business. And their gross margin actually declined by about 3 percentage points. And presumably that is because they're offering a lot more incentives that eats into their margins and things like that. Marking down the prices of homes, that's another form of an incentive. Um, Things like that. Net income was up 13% year over year. They have a lot of liquidity, but they also have the most debt of any home builder I follow. That's my biggest negative of the company, and something I know Tyler's expressed concerns about as well. But having said that, there's a lot to like about what they're doing right now. They just expanded into the Atlanta home market, which is it's the biggest market in the Southeast. And this is the first time they're jumping into that one. They did that through an acquisition of a relatively small home builder. Um, and they're calling for a 9,250 homes in 2025. The general takeaway and I'm not talking about Green Brick. These are, I just read their report before we recorded this, but looking at some of the others like DR Horton, Lennar, things like that, my general takeaway is that it's still a strong environment for home builders, compared to, because low existing home inventories, that hasn't changed, but backlogs are shrinking a bit, and it is requiring a little bit more incentive to get people to buy a home throughout the industry. But great quarter. I don't like to use the term blowout quarter too often, but this was pretty close. And same with Green Brick. So Tyler, what do you think about theirs?
I there wasn't a whole lot in it that I didn't like, really. I mean, they talked revenue was up, I think, like 20%. Let me make sure. I always want to make sure that sometimes I'm a
More than
little
that,
bit off with
24.
some of these. Yeah, 24% on its revenue, and then it's year. Here's the one that really kind of diluted earnings per share was up 37.6% and put the company on pace over the past 5 years to grow its earnings per share at 39% annually. This is a business that has been growing at a rate that you wouldn't expect in the home building industry. Across the board, I went through and looked, and most everything that I saw was where I want it to be. So it's owned lots and controlled lots between 2023 and 2024. Exits is way up. They have 37,800 controlled lots going into 2025 compared to 26,600 in 2023. Their spending for 2025 land development is going up. So if they're making land development spend, they are expecting to grow, which is quite surprising considering what we talked about with affordability and things like that. And here's the one that always stands out to me. There's gross margins, there's low debt and things like that. But one of the things that I really appreciate about a good, well-oiled machine when it comes to home building is a metric called absorption rate. And that is total homes sold per community per month, or active selling communities, basically the ones that are ready to start taking orders and things like that. In the fourth quarter, their absorption rate per active selling community was 8.3. So that's orders, that is a stellar number. Consider, most absorption rates when you hear absorption rates for these companies, it tends to be in the 5-6, and that's good pacing for a home builder. So to see Green Brick putting up an 8.3 absorption rate, that is stellar, especially in what we would consider a struggling home building industry. Returns look fantastic. It has some of the highest gross margins in the industry, 33%. Some of the highest returns on equity and some of the lowest debt to capital, despite owning all of its own lots and doing all of its development in-house. Development in-house typically means that you have more capital and you use more debt to do it, but they've kept their total capital down considerably relative to most other home builders, especially one that decides to own all of its lots instead of going with this land light strategy that so many others are employing today. And then just to top it all off, management accelerated their buyback program. The board approved another $100 million in share buybacks. So taking a little bit of that excess capital and buying back shares, which at 8 times earnings today, and based on their spend and development rates, it looks like they're going to grow again in 2025. This is, I keep saying it, I think this is the best business in the industry. I know that might be, a little bit of heresy, considering NVR has been the standard bearer of quality in this industry for a long time, but I'm really starting to think that Greenbrook could give them a run for their money.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.